I want to show you how you can trade the ICT silver bullet strategy easily and more professional way that will give you higher risk to reward ratio and higher probability of success. The session based ICT strategy with an average win rate of about 80% or more. You can trade it on the 5 minutes time frame, but it is better and more clearer to trade it on the 1 minute time frame. So now let's go to the rules of this strategy. The rule of the strategy, the first rule is you wait for that time I just told you about, now the 10 a.m. Eastern time or 10 a.m. New York time. So, and when that time comes, you would identify the Asian low and Asian high. Both the combination of Asian high and low and the London highs and low, these are potential areas of liquidity. So the third thing you need to do is to wait for a run on liquidity, run of liquidity. You want the liquidity to be swept either to the upside or to the downside of the Asian and London session. All right, so and that liquidity I'm talking about could be double equal highs or equal lows, could be trend line liquidity, could be just mostly the high of the day, low of the day. All right, so once that has happened, the next thing you need to do is to wait for a displacement in the opposite side or direction of the liquidity sweep, which will create what is called the market structure shift, the MSS, or the change of character. So after that, after you've seen a change of character or the market structure shift, you wait for the price to come back to the order block or fair value gap, which caused the market structure shift or change of character. Don't worry, in a while we're going to be I'm going to show you in a chart how this works. All right, so the sixth thing you need to do, the sixth step, is to wait for price to come back to the order block of fair value gap, which caused the market structure shift. So now after that, you enter the trade, place your stop loss above the liquidity sweep for a sell or below the liquidity sweep for a buy. When you're talking about a buy zone now, for the take profits, you target the next liquidity low for a sell scenario or the next liquidity high for a buy scenario. Now look at the schematic I just did. I just did this schematic to explain this. Now, if this is this London and the Asian session, the London and the Asian or Tokyo session, okay, Asian session. So this is a combination. So you want to identify the day's high. This is the day's high and the day's low for the Asian combination of the Asian and the London session. So you just draw a line. This is a line, this line, draw a line, and this line is at 10 a.m. New York time. I'm going to be showing you how there's a particular indicator you're going to use to be able to help you draw this line. So on TradingView, we're going to get into that in a while. So this is the line showing the 10 a.m. New York time or 3 p.m. London time. So what happens is that you're going to identify the highs and the lows of the Asian and the London session. So you can see here that at this time there will be a run of liquidity. This is liquidity. There will be a run of liquidity to the upside or to the downside, but in this case this is a sell scenario, so we are having a run of liquidity. This liquidity, all these liquidities, this high will be swept. If you are looking at a sell scenario, swept by this movement. So this is a run of liquidity or liquidity sweep. So once the liquidity sweep have happened, you're going to look for a displacement to the opposite direction of the liquidity sweep. The liquidity sweep is to the upside, right? So you're going to wait for a liquidity movement or the displacement to the downside in opposite direction to this liquidity sweep. So the opposite direction to the liquidity sweep is sell direction. Is the opposite direction is sell direction. So when that happens, you're going to see what is called the market structure shift or change of character will happen. So when that happens, now the ICT traders or Michael who doesn't likes trading from the fair value gap. This is the FVG, fair value gap, all right here. So but for me, I mostly like trading from order blocks. All right, you want to allow the market to return to the order block right here. Okay, on return to the order block, which is the supply zone that created the order block that created the market structure shift or change of character. So and now you now trade from there, and you're going to take your profit just at this liquidity low. Okay, this is where you're going to take your profit. You can take first profit here and second profit here. All right, so but for the Michael Huddleston or the ICT founder likes trading from the FVG. All right, so it takes the he would take the trade from here and take first profit here, all right, and second profit at the day's low, all right, the other form of the other side of liquidity, all right. But me, I like trading other blocks. I like trading supply zones and demand zones, so I would trade from a supply zone right here. That is where I would take my trade from. All right, so but this is just an explanation of how this is the sell scenario of the silver bullet strategy. Now let us look for a buy scenario, just opposite of the sell scenario. For a buy scenario, this is the London, this is both this is the London and the combination of the London and the Asian session or the Tokyo session. All right, so we identify the high. This is the high of the day and the low of the day, and now we draw this we just place this vertical line here, which is on the 10 a.m. New York time or the 3 p.m. London time. So what you're going to see for a sell scenario is that this liquidity here, this equal lows will be swept by a movement. So when the liquidity is swept by a movement to the downside, you're going to wait for a displacement in the opposite direction of the liquidity sweep. The liquidity sweep was to the downside, so the opposite direction market would give us a change of character or the market structure shift. When that happens, you take the trade from the FVG, all right, or the market will return to the FVG or return to the other block, any of the case, FVG or other block, and you take a buy trade. The first take profit to be right here, TP1, and the second take profit, TP2, will be at the other side of the liquidity pool or the day's high. All right, so this is the sell, this is the buy scenario, and this happens between 10 a.m. New York time to 11 a.m. New York time, or 3 p.m. London time to 4 p.m. London time. So let us see how you're going to set up your chart if you have to trade this. Please kindly subscribe to this channel if you're here to do so. Turn on the notification bell so you can be alerted when I post new videos. All right, and join our free Telegram channel. The link is in the description box of this video. I run a one-on-one mentorship program. Contact me, and my contact detail is in our free Telegram channel. The link to the free Telegram channel is in the description box of this video. Now to set up your chart, this is a trading view chart. Okay, this is a trading view chart. Now this is a 5 minutes time frame. I'm on a 5 minutes time frame right now. All right, this is a time frame. I'm on a 5 minutes time frame, but that's notwithstanding, we're going to change it to 1 minute time frame as we proceed. But I just want to show you how this works. So this is you're going to set up this chart for this strategy. It's best traded. The strategy is best traded on TradingView. You can trade it on MT4, MT5, but on TradingView you have some tools or indicators that help you to make it easier for you. All right, so this is my 5 minutes time frame of my Euro USD on TradingView. The next thing I'm going to do, come here, this three dotted line on, I click on the euro dollar sign on this three dotted line. You can see this three dotted line right there. All right, so click on it. When you click on it, what you want to do, want to change this time, the time to London time. All right, so you scroll, so you come to settings. Once you click on those three dotted line, you come to settings. You can see settings right there. Come to settings, and when you scroll down to settings, click on the settings, and you would see the time zone. You're going to see time zone. My own time zone currently here, you can see, is on London time. All right, because I'm on the GMT. I'm on the GMT location. All right, I have my time zone is London time. All right, GMT. So, but I want you to change this. We're going to change this to New York time so that it can be easy for us. The chart will be customized to New York time. So when you click on this, you will now see a lot of time zones, a list of time zones you're going to see. But we want us to use, you click on UTC for New York. As you can see, UTC for New York. So when you click on it, you now click on OK. So when you click on OK, so it will enter to UTC for New York time. That's the time zone we want to trade this strategy. And now say OK. Okay, so now once you've done that, now I want to install an indicator that will help us to demarcate the different sessions on our chart. Okay, the market sessions, the London session, New York session, the Tokyo session. So you click on this function sign, in order for us to add an indicator. You type in sessions. We are looking for sessions. So sessions indicate, when you type on sessions, you're going to see this indicator called sessions on chart by FOREX. All right, sessions on chart by FOREX. So this is the indicator we're going to install. Click on it. It would be installed on your chart. So here you can see the indicator has now been installed. These are different sessions. Okay, you have the Asian. This is the Asian or the Tokyo session. This is the London session, and this is the New York session. All right, so these are the three sessions here. So it will demarcate it will color the chart in different sessions, indicating different market sessions. So but we want to do something further. I want to further customize this chart. What you need to do now is to now click on that sessions. This is the sessions indicator. All right, so you click on it. All right, click on this three dotted line here, this three dotted line. So when you click on the three dotted line, so you come to settings. Okay, you can see settings here. Come to settings, and when you come to settings, you want to uncheck London session under inputs. Uncheck London session and Tokyo session. Uncheck London session and Tokyo session, leaving us with only New York session. This is the only session we want to appear on our chart. We want those other sessions to be unchecked and disappear from our chart so that we can concentrate on the New York session, because it's the New York session we want to trade on. Now you now say okay, change the New York time setting to start by 10 a.m. and end by 11 a.m. and now you can now say okay. So you do that. Once you do that, this is what you're going to have. Your chart will look like this. Okay, your chart will look like this. This pink coloring you can see here. This pink coloring is 10 a.m. to 11 a.m. New York time, or which is the same as 3 p.m. to 4 p.m. London time. You can see this coloring as well. This is the only is highlighted. This coloring also shows 10 a.m. to 11 a.m. New York time, or 3 p.m. to 4 p.m. London time. So this is the only time that is highlighted on our chart, and that is the time we're going to be trading this strategy. All right, so what's the next thing we're going to do? You now change this to 1 minute time frame. Since it's a 1 minute time frame we're going to trade, so you can see when you change to the 1 minute time frame and zoom in, this is the time, this is the color section we want to trade. That's 10 a.m. to 11 a.m. New York time. This is as well the same thing as 3 p.m. to 4 p.m. London time. Okay, it's the same time. So that section of the chart is what we're going to trade now on 1 minute time frame. So you just click here to you click here and change this time frame from 5 minutes to 1 minute time frame, so that we are now set for business. So now let us see now. You can see here now. Can you see here what happened here? Now this white section is the combination of the London and Tokyo session. Okay, so you see this is the high of the day. This was swept. This liquidity, this is the liquidity, the market. So here you can see here that the liquidity was swept. It was swept by this candle right here. So after the liquidity was swept, there's a displacement to the downside, giving us a change in market structure. Okay, let's come again. This is a liquidity sweep. Okay, this is a liquidity sweep during this time frame. All right, the liquidity sweep by this candle, and there's a displacement to the opposite direction of the liquidity sweep, giving us a market structure shift. And that was when there was a market structure shift. The market returned. They just happened here. It returned to other block. This is the other block or sell or a supply zone. The market returned to the supply zone, and there was a sell-off. All right. So this is it. Let me zoom so you can actually see it. Can you see? Can you actually see it now clearly? So you can see what happens here. You need to have an eye to understand, to identify this. It looks so tiny, but you need to have an eye to identify this. So this is the liquidity, and there was a sweep of this liquidity from the London and Tokyo session, and you can see that this liquidity was swept, and there was a market traded down, giving us a displacement to the downside. There was a displacement of change of market structure shift, and now return to other block right there. Okay, this one was not FVG, return to other block, and there was a sell. All right, and there was a sell right there. Can you see it? So this is one example. Let's see another example. This is a buy scenario. The one we just saw previously was a sell scenario. So this was a buy scenario, and you can see here that this is the liquidity pool from the Tokyo and London session. So this liquidity pool was taken out by this movement, and after this liquidity pool was taken out this movement, there was a market structure shift right there. There was the market traded in the opposite direction of the liquidity sweep, or that giving us a displacement in the opposite direction, giving us a market structure shift or change of character. Okay, or change of character. And now the market now traded back into the giving a return to order block, and there was a buy. You can see there was a buy right there. Okay, there was a buy. Let me just zoom so that you can see clearly. Okay, can you see what happened there? Can you see what happened there? So this is the strategy, and now market structure shift. Okay, return to order block right there, and there was a buy. Okay, so this is, let's see another example. Let's see one more example. So look at this one as well. This is a sell scenario as well. The market structure, there was a sweep of liquidity. There was a market liquidity sweep, and the displacement to the downside in opposite direction of liquidity sweep, giving us a change of character or the market structure shift. And the market traded right there up again, traded up. The market traded up to mitigate the supply zone or the order block that caused the market structure shift or change of character. Now, as I told you, I mostly prefer to trade from supply or demand zones, or bearish order block or bullish order block, instead of trading from FVGs. To me, order blocks are more reliable than FVGs. That is for me personally. So ICT traders trade from FVG. They prefer trading from FVGs. For me, I trade from order blocks or supply zones, or supply and demand zone, demand and supply zones, as the case might be, or bearish and bullish and bearish order blocks, as you call it on ICT. All right, so this is the strategy. I want you to go to your chart and backtest this. This happens almost every day. All right, this happens and has a win rate of over 80% or about 80%. So please backtest this strategy. When you see a new strategy, is your duty to go and backtest this strategy. Follow the steps I've outlined on this video. Backtest this strategy. You're going to see how it works. When you have gained a hand and a mastery of the workings of the strategy, you can as well add it to your arsenal. You can add it to your arsenal of strategies used to make money from the forex market. If you're yet to join our FOREX Telegram channel, do so. You can see we post chart analysis that helps you to trade, helps you to see the market, and also to trade and to make money from the market for free. And you want me to mentor you one-on-one, kindly contact me. I have a lot of persons on mentorship program and one-on-one mentorship program. They learn to become great traders, and after which they start trading on their own. Okay, so till I come your way next time, useful content. Do have a wonderful day ahead. Bye.